Hey traders, trading like it's hot, it's possible, and I'm here to show you how I do it. You ready? Let's get started. Welcome back to Trading It Like It's Hot, and I hope you traded it like it's hot today because the stock market was on fire. We had banks going up today with a nice, very nice comeback based on yesterday. It was not so favorable, but today, very nice comebacks. I hope you bought the dip. I certainly bought the dip. And that's what I'm going to talk about here today, buying the dip. Definitely, I'm still looking at more banks on where I'm going to buy at, where I'm going to get in. This is definitely a fantastic strategy because you're getting everything way lower than it's supposed to be. Look at it like this. At these prices for these banks last week, you would have jumped all over it. So why not now? You're getting the banks for half off, basically. Some of them three-fourths off, and you're able to get in at a very low price and get your cost per share down if you already own these banks to an unbelievable level. Those are the opportunities that we're looking for, opportunities to get in the market at an ideal position. So let's take a look at a couple of charts. So let's get started with the Dow. I'm still very optimistic with the Dow moving up. I know right here we're showing that we're below the V-shaped recovery based on my regression chart here. However, I'm super excited about the Dow going up. I won't ignore the fact that the Dow could eventually go down because we have some resistance right here and a lot of traffic right here that's trying to push us down. You could look for it to fall towards this 29K level. However, like I said, I'm very optimistic about the Dow going up. So we're going to trade in that motion with the Dow still in V-shaped recovery. As far as the dips, let's take a look at a couple of these banks because, as I mentioned, I got in on these banks on the dips. I'm hoping that you got in as well. However, there'll still be opportunities for you to take advantage of some of these dips. We're looking at PACW right now. I got in on PACW at about $9.46 a share. Right now, it's trading at about $13. That dip was available early on, so I pretty much got in immediately after the market opened and I saw the big banks, these big banks dipping. So with that, I was able to get that $9.46 price. However, if this falls back down to the $9.46 range, I would buy it again. This is also, if you look at my regressions chart, at the bottom of the regression chart. So this is not a horrible buying spot right here. You just want to watch it because it is definitely still a falling knife and falling down. So I'm very comfortable at that $9 spot. Hey, I think this stock is actually worth a whole lot more than $9. I think it's worth a whole lot more than where it is sitting at $13. So I'm looking forward for this stock to make a nice recovery. Moving on to Wall Western Alliance Bancorp, I was able to pick this stock up at $24.19 a share. This is still in a very nice level. This has gone all the way up in the 30s, into the high 30s, and come back down. If it comes back down to 24.19 again, I would buy it again. So you can definitely set your buy levels really low on these because, like I said, they are going to be in recovery, but they can still be falling at this present moment. But they're going to recover. The next one here is FRC. Now, this one here, First Republic Bank, I couldn't believe the price that I got this one for. I got this one at $27.20. If you see a stock that has basically cut itself in half multiple times, it's practically very difficult. It's really difficult to lose on this type of buy. I got this stock for $27.20. This stock was trading for $125 just in February a share. Now I'm getting it for under $30. That's kind of ridiculous. So those kind of opportunities, definitely, guys, those are the opportunities I'm talking about that you want to look for and that you want to find. There is still time to get in on this. Right now, it's trading at about 40 at it's trading at $39.63. However, even if it doesn't fall from here, like I said, this is a bargain at this price. In my opinion, this is still a bargain at this price. I'll be adding more of this. If it falls any more, I will be looking to get my looking to pick up some more of this as well. Now, I haven't gotten in on Charles Schwab yet. However, this is one I'm looking at, but I still think that Charles Schwab is in a really good spot to buy. But I've set my buy mark down here at $46 because it's still definitely a falling knife. Don't want to make a habit of buying those. But $46 would be a fantastic price to grab this. $56 is even a fantastic price to grab this. But it, like I said, the stock is still falling, and you have time to let it start to form and shape in a recovery pattern. KeyBank, man, this right here, KeyBank to me is oversold. I think that this is a fantastic price. It's still a dividend paying stock. I mean, just the dividend alone for a year is going to get you a dollar. Of the stock is only trading at $12, and you're going to get a dollar dividend. That's kind of insane. So my I already had Key, so my buy point here is right here at $11. So I'm looking for this to come down and hit the $11 mark. I'll add to this and get my cost per share down, because my cost per share right now on Key is kind of high. My cost per share, I think, is somewhere around 17, $18. This next one is Goldman Sachs. Now, interestingly enough, I read in Reuters about this actually GS actually being the bank that acquired the bond portfolio from SVB, which ultimately set in motion the failure of SVB. So that was pretty interesting. Check that out in Reuters. Uh, you can pretty much probably just look it up on the internet, and you'll see that article about how Goldman Sachs acquired that from that was like right before the SVB fall. So just an interesting story. But with that, Goldman Sachs, not oversold. However, I think that is still definitely a good stock to be taking a look at. My buy is really low here. I have a buy in at 287. So I'm looking for this to come down to about 287. This might even be a really good short play down into 287, or put, if you're an option trader, down into 287. I'd probably wait to see if it bounces up uh, off of this regression line first and comes back down again. But really good short play. But my buy is set here at $287. I think that would be a really good spot to grab this and be a fair value for it as well. And lastly, Bank of America. I know I've been talking about Bank of America a lot, but hey, with this SVB issue and the SVB sanctions, Bank of America has pulled in 15 billion in new deposits since then. So, Bank of America, I really like Bank of America. It's a good stock to have, even if it's a little low. I think it's just a solid stock as a holder, as an income stock, and something that you would just keep in your portfolio. It's several institutions. Berkshire has like over 1 billion shares of Bank of America. It's not going anywhere. So I like Bank of America, and this is one that I definitely think should be in your portfolio. So hopefully this helps you all out with buying the dip on these banks. There are other options out there. Make sure you take a look, do your research, but definitely buy the dip. So that's my chart analysis. Hope you enjoyed the video. Remember to like, subscribe, and share your comments below. But definitely remember to keep trading it like it's hot. See you next time.